Hi folks, how you doing? So let's start today's trade review. So it was a very interesting morning. Today is May the 6th, 2020. I'll show you my trades to start so you can take a look at that, and I'll reference this later in the video, of course. So basically I closed my call spread that I was swinging overnight first thing 3 minutes into trading because the spiders and the market was moving up. So I didn't want to take any risk, and I said, you know what? I'm going to close it, small profit, and that's it. So that was it. And then after that, we proceeded to do some interesting trading. So let's go over those trades real quick, and I'll run through what I was thinking about going into this morning and the levels that I was watching. So interesting, I looked at my phone this morning and the NASDAQ was above 9,000. And I knew something like this could happen where we had a massive dump into the close yesterday, and then we open right back up to where we were previously. It makes a lot of sense because again, going back to the psychological way of how people view markets, is that what they do, these smart money traders, is that they're going to move the price around and try to kind of push a certain sentiment. And what they do is they'll get a lot of these retail traders trying to look bearish and try to short these markets, and then all of a sudden they push it right back up, and they get you panicking up here, and then you get another thing like this to get a whole bunch of shorts involved, and then do the same crap over and over again. So once you start to get a hold of these games that they're playing, trading becomes a little easier. So let's go over what I was watching here generally. And it's all probabilities, guys. It's all probabilities, and it's all psychology and probabilities. That's it. Okay, so on the SPX 500 USD, I was looking at some pre-market levels, and you can see how we moved lower to start. Now, don't mind all the lines on my chart, but generally this was the high of yesterday, and this was the low of yesterday, and then we had a second leg down after in the evening, and then we proceeded to have a massive rally. So this is about where we opened today in this area, kind of looking for a lower high. Now, the levels I was watching as support was this sort of thing right here, where you can see where we tested it once, twice, and then bounced. Now, going into the morning, we broke that level, but we didn't get any follow through. So things like that signal light bulbs to pop up in my head, because when you see a level get broken and then no follow through and it's sort of creeping in the other direction, you can now use that level as kind of a reference point, okay? So generally that's what I was using as a reference point for my first long trade to get into. I originally had my line here because we had those two supports and then we were moving higher, but then we had broke it in the pre-market and we had formed a new higher low here and then pushed above from that and regained these prices. So that's why I moved the line down there, okay? Perfect. So let's get into it here, and you can see that the SPY opened up here and we tried to push immediately higher. I was watching the Qs and they were trading around 220, above 220 in fact. So that's what had me saying, all right, look, if Qs start pushing up here, because you know, with morning momentum, you never know what could happen. We push, and sooner or later we're breaking the highs basically. So I was not going to take any risks there, and my choices for that position were basically either put in a break-even stop or lock in a bit of profit now. So I chose to lock in the profit, and that was it, you know. And after that we proceeded to move lower, and how we moved lower was very interesting this morning. So there was definitely some panic in this thing here, and they were sort of pushing a certain sentiment. Now, it was more aggressive on XLF. In fact, on the financial sector, we had aggressively broken below the low of yesterday, and that's kind of what had me interested in this whole thing. So you can see how we opened up here and then we pushed down to test yesterday's low, briefly held the bid, and then slowly started dropping and caused a panic, right? So we had, you could say, 3 legs down. 1, 2, and then a third. And it depends on how you kind of decide to look at it. So on a 5-minute chart, it looks like one big leg down. Basically, the financial sector was weak. Okay, so now let's go over my trades on the SPY here. So I'm going to use the 1-minute chart just because some of the entries were very precise, and the 2-minute chart actually doesn't show you exactly where I entered. So first things first, right here near the highs, as SPY was moving higher, 288.50, I covered my short call spread, the one I held overnight. All right, so I covered that. Now I'm back to all cash. Now I'm watching the market kind of grinding lower. And again, I was using that reference point on the SPX levels. On SPY, you can't see it as much, but it was basically under 287, about 286.50. And like I said, the SPY chart is a little more noisy with these kind of fake prints showing up here. So what I did at this point now, as I saw this kind of lower lows with no follow through, I was expecting the low of day on XLF to somewhat hold, and even if it would break lower, kind of somewhat catch a bid or hold, right? So what I did was, based on the price action I was seeing, I decided to open up a bullish position at this point right here, 952. All right, so my bullish position that I entered was this: short to 286 puts, long to 284 puts. Collected a credit, 951. All right, so that was the first entry. Now, soon after that, at 9:55, when I saw that SPY was seeing some selling come in. Now, this was real selling I saw, and it's morning momentum, so I'm not playing around. And again, when I entered the position, I had a clear level of getting out, and that was around 286.50. It would have been under 287 to 286.50. When I saw the kind of selling that was coming in there, no remorse for the bulls type of selling like we were seeing yesterday, I said, the hell with this. I covered the short put immediately right there. Not immediately, but pretty soon after. So you can see it was at 9:55, so we had already seen a pretty aggressive sell, and this happened really fast. So I covered the short puts there, right there for a loss. And then I wrote out the long puts. Now I managed to catch a bit more downside. Right here is when I covered one of the long puts for some profits. We saw a bounce here. Now, when I see bounces after big moves like this, I'm always skeptical because there are likely more traders trapped. So I would categorize this as a first leg down. Now we see this bounce here. I was watching how the offers were playing. Now you can see we bounced all the way up to 286.50. At first it was 286 and a quarter. 286.50 did not hold very long. You can see we stayed there for about a couple minutes, not even, maybe about 30 seconds. And then we proceeded to see more selling, and we lost that 286 and a quarter pretty fast. So it kept me confident to holding those puts. When I saw us breaking to a lower low here, I wanted to see what kind of follow through we're going to get, all right? So I'm not immediately looking to buy or immediately looking to sell. I want to see what these bulls and what these bears are doing at these price levels. So when I saw us break to a lower low under 286 and not seeing too much follow through, I decided to cover the other long option because these options that I was short and long are same day expiry. So having experience trading these things, I know that they can really get killed fast. Definitely it takes a bit of experience to learn how to trade same day expiry options. So I decided to cover the last of my long puts right here. When I saw we break to a lower low, no follow through. Out, done, that's it, no questions asked. You can see that we attempted to move lower again. Now this is where it starts to get very interesting. So at this point, XLF was down at a support level. It would have been 2 trading sessions ago, and it was this level. It was 21.45. Based on how aggressively we moved into that level, I thought, okay, there's at least some kind of bounce is likely here. I want to see if the Qs can hold the 218 area. And based on how extended we are and how much volatility just spiked, it might be a good risk to reward to short some puts. And that's how we do it. We short puts when volatility spikes. So at that point right there is when I was watching the tape very closely around that 45 level on XLF and around the 218 level on the Qs. Now look at this price action on the spiders. Take a look, break lower by a few pennies, inside bar, break lower. Now watch, inside bar, break lower by a couple of pennies here. So this is where it's getting really interesting. Now the lows here, 285.09, 11.06, and then we're bull. So we broke right here is what that caught my attention, where we saw a break by 3 pennies, no follow through. We're overextended to the downside. I'm interested in getting long there, and that's exactly where I entered the position, 10.14. You can see right here, 10.14 is where I sold the 284 put and bought the 282 put, collected $45 per spread, and that was the trade, okay? And what happened after that? Well, the rest is history. We grinded up here to this 285.80, back to this sort of area I was watching earlier. And you can see how we held this bid. And when you're in a long position like this, trying to catch a low, you want to see bids holding. You want to see these 285 and 3/4 kind of hold on the bid and then try and push higher. You want to see XLF with continued buying. And that's exactly what happened. We started to see some continued buying. We pushed higher aggressively. Now at this point right here is when I was saying, okay, it's likely that we could see some sort of 2-minute lower high, and it was right at the 2-minute exponential, and I used this as a reference, so I decided to take off half the position there. If I had a bigger position, maybe I would have only taken off a third of the position. Anyways, I decided to take off half right there. Now I was just continuing to watch, and you can see how we just kept grinding and grinding. Another higher low, 286.25. Boom, 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 boom. Now right here, this put spread that I collected $45 for is now at $10. So you can see how these things go to zero fast. And also with the drop in volatility. So I decided to get rid of the last of the position here when I saw that XLF had been rejecting its 5-minute exponential moving average 2 times now. So you see a 2 times held offer. I'm looking to probably exit any long trades or take profit on some long trades. And, you know, after that, we kind of grind lower. So I managed to catch the bottom here and catch near the top of this move just by, following the flow of the market. That's pretty much it, guys. So those are my entries, and I'm out of the trade. I'm all cash now. You can see here, again, just to confirm what I was telling you, I took off the first one at 26 and I took off the last one at 11 at 10:52. And that was my trading morning. Very interesting trading session. So guys, the moral of this video is going to be not the trades I took, but the fact that I followed my plan when I entered the trade, okay? So when I shorted the puts here, I had a very clear exit plan. I followed the exit plan, and that was the story. Now, when I was still long the puts down here, my exit plan was a little bit shifted. So I was still long puts. I was willing to profit from a bit of downside, but I was also willing to cut them if that was going to be our low. Having the ability to scalp long options and to kind of look for good risk to reward opportunities to sell premium, in my opinion, are the two most important things to my strategy right now. So that's pretty much it. Now, when I was selling these puts down here, this was not going to be a random trade. I just sell the puts and hope this is the bottom, okay? I was using the pre-market level as a reference point. Because of how much we moved on this last trade that I took here on the short selling at 284 puts, I was using this level as a reference point. That level would have been my maximum stop. So I sold those puts down there anticipating that this level was not going to break immediately, okay? And you can see how we're in this sort of broad trading range right now, and now we've kind of formed up for a lower high here, and now we're coming down for another higher low. So we're in sort of a tightening trading range, managed to take some opportunity from that, and that's going to be it for today, guys. So again, keep your risk managed, and all the best to you going forward. Take care, bye.